holding.
It is. I mean, so that's trade is clearly important. It was actually even just China slowing down. So, but on both those fronts, we've made progress. So we are the trade front. So I go back. Hey, you remember during his campaign, Trump beat up Mexico. Well, as it turns out, we actually have a deal. Needs to get ratified by Congress, but we can make progress. We're making progress with U.S.-China trade. That's tremendously important because that has huge implications for the broader global economy.
Well, what's interesting is before we went live here, we were saying that's been kind of quiet this week in terms of U.S.-China rhetoric, which could be a good thing.
I think it is,
yeah.
and they are talking, and that's the key. I just heard that the U.S. delegates are heading back over to Beijing to continue to talk. So as long as they're talking, we're making progress. They're moving the ball forward. Not done yet, but we should be seeing a deal over at least, I'd say, the next month or two.
So even though emerging markets, they are the mice in this scenario, they remain compelling, though, and we've seen that in the performance this year for sure.
They do, and so what changed? Well, the U.S. economy slowed down. The Fed backed off. Inflation has remained low. We just talked about seeing improvement between the U.S. and China. Well, meanwhile, you look at EM assets, and based on the price action last year, they discounted a pretty negative scenario. I'm not here pounding the table saying that EM are off to the races. It's going to be a great place to be for the next several years. But my view is that they discounted a very negative outlook. We're just going to see a transition to an okay outlook. I think there's outsized return potential in that scenario.
So it sounds like policy really is the key factor here when you look at the Fed, when you look at trade deals and so forth.
It is. I don't think it's an overly complicated world right now. It's policies. And it's not just the Fed. So we've got low inflation globally. To me, going back to the EM question, it's not, again, it's U.S.-China, that's huge. But domestically, inflation, and I'm speaking in broad terms, EM, it's in low, so their central banks are in a position to start running their own stimulative monetary policy to focus on domestic demand. Right. So yeah, there's not a lot of moving parts to figure out right now.
And if this scenario remains as it is right now, and we do get progress on the trade deals, it sounds like it sets up for, at least stability in the global equity market.
It is. So you look at what's going on in the U.S.,
right.
powering ahead, making new highs. You can make the argument, has that already been discounted? Maybe, but I don't think in EM. I think EM has lagged from a valuation standpoint. EM assets, I think, look much more attractive. So if you're positioning for this kind of continued improvement on global trade, I think EM is probably still a great place to be positioned.
All right, Jack, thanks so much for joining us at MarketSite. And thank you for joining me on Trade Talks. I'm Joe Malantrino, Global Markets Reporter at Nasdaq.